Tom Siebel is with us, CEO, C3AI. So glad you're here, Tom. Thanks for being here. So at this point now, obviously we've seen fluctuations in what's been going on. How would you describe the last quarter?
Last quarter I'd describe it as a great quarter, 21% year-over-year revenue growth. That would make us one of the fastest growing companies in the public software universe. I think our transaction volume was up, contract volume was up, I think 121%. Generative AI business up. Business was cash positive. We exceeded on kind of virtually, every metric that we could succeed on. So I think it was a great quarter.
Yeah. Look, I know that you were quoted as saying the last quarter, maybe there was a misunderstanding. What part of what people expected and what part of what you delivered, which you describe as a great quarter, would you actually say was the biggest misunderstanding of all?
I think there's some confusion around professional services revenue. I think that our professional services revenue was a little higher in the mix. So there's two line items in revenue. We have subscription and we have professional services. And the professional services, we guide professional services to be between 10 and 20% of our revenue. I think it was 16, but that was a little higher than people expected. Now, I think the confusion is around when people think of professional services, they think of consulting services like what Accenture does or what I think Palantir does, okay? And they're really looking for companies like us to be in the license business. What they don't understand is that over 70% of that professional services revenue were in fact software licenses. It was software code, compiled code delivered to our customers as part of our production products that they use over the lifetime of the agreement. So the great majority is, in the old days that would have been characterized as license revenue. Now under ASC 606, there's some technical reasons why you characterize that particular kind of work as professional services, but it is in fact software. So I think there's a little bit of confusion around that.
Well, I'm glad you had the moment here to explain that to folks, because sometimes people are taken aback when they see a double-digit loss, though that has become quite the norm here on Wall Street after earnings, right? We'll see double-digit win, double-digit loss. There's a lot of volatility, no doubt. But you think that the company is really actually in the perfect position after nearly 2 decades of doing this, right? You're the founder, to get that AI spend, right? To capture when people want to spend, when these companies want to spend, they're going to do it with C3AI, right? What do they want to grow with you and spend on?
To be clear, our loss was much less than the market expected, so there was no surprise there. And the cash was more positive than the market expected. That being said, this C3AI is the original enterprise AI company. We began in 2009. This would be before the GPU, before the Azure, before the Google Cloud, before any of this happened. We spent billions of dollars building this AI platform, and now 90 turnkey enterprise AI applications. And now, 15 years later, enterprise AI is at the tip of everyone's tongue and the top of everyone's agenda. And C3AI is extraordinarily well positioned to deliver solutions into that market demand.
And when you think about the competitive landscape, Palantir comes to mind, but in the world of the U.S. Defense, Department of Defense and contracts and with that, what do you foresee for C3AI there?
Well, I think, as I recall, the defense and the intelligence community, that was about 30% of our bookings in the quarter. So that's a very healthy business. I would say the competitor to C3AI is build it yourself out of piece parts that they will get from the hyperscalers like Google Cloud, Azure, and AWS. That being said, also, these are our largest partners. 71% of our contracts in the quarter we closed in partnership, joint marketing, joint selling with GCP, AWS, and Azure. So, in the long run, companies, once we get into new markets, whether it was ERP, CRM, relational database, everybody tries to build that stuff themselves. Nobody succeeds. Everybody tries to build enterprise AI applications. It all comes crashing down around them. And after it comes crashing down around them, we come in and bring them live.
And I think about the path to profitability. I'd like to hear more about that. And you have strategic partnerships with some of the real big guys, right? Like Microsoft and Adobe and such. Tell me about, is it almost good to be this sort of underdog and up and comer? Even, I know you've been doing this for a long time, but this way everybody will know C3AI going forward.
Well, I think there's a clear path to profitability. You understand, we were cash positive last quarter. We're cash positive this quarter. We expect to be cash positive this year. Our gross margins are very healthy. Our revenue growth rates have been exceeding our expense growth rates now, and we expect them to continue to exceed revenue growth rates to exceed our expense growth rates generally in the quarters going forward. So now it's just all a matter of time and scale that we cross over into non-GAAP profitable business. That being said, we have $750 million in the bank. We wash our cash very carefully. And so we have a very well-capitalized company. And I think we're extraordinarily well-positioned to build a cash positive, profitable, rapidly growing, market-leading enterprise AI company.
And so at this point, I like hearing that for you, and seeing obviously those cash flows being positive and the gross margins exceeding some of the expenses. I mean, we've heard from Intel, and I'm just making it a tech story, just the extensive cost cutting that they've had to do. You mentioned cutting costs. How difficult is that for you?
No, we've been managing costs, and we've been managing costs carefully, and that resulted in a cash positive business last quarter and a surprisingly cash positive business this quarter as it relates to the market expectations. So while we are managing our costs, make no mistake, we are not cutting costs. We are investing in growth. We're investing in market share, investing in sales, investing in support capacity, and investing in technology leadership. And we're doing this in Europe, North America, South America, the federal space, and in Asia. We are investing in growth.
A technology leader, no doubt. And thank you for that clarification, Tom. It's wonderful to see you. I'm glad you were on with us today. Thank you for coming back on, and we'll see you again soon. Tom Siebel, CEO, founder at C3AI. Thanks, Tom.